This week, the S&P 500 whipsawed up and down within a 100-point range and gave the market participants a spook on quad watching Friday. From these price actions, is a sell-off going to accelerate? In this S&P 500 analysis video, we will look at the signs the market is sending, along with analyzing the S&P 500 price actions, the market sentiments, and its internals to see where the S&P 500 might be headed in the coming week. On this S&P 500 monthly chart, we see the September low is still above the August low, but it is showing a loss on a month-over-month basis. Zooming in on the S&P 500 weekly chart, the range for the week was 136.5 points, and it lost 21.5 points or 0.64% for the week. It is now below the February high by 74 points or a little bit over 2%. The 10-week and the 40-week moving average are still up, but the weekly close is below the 10-week moving average. And also it is in a one-time framing down on a weekly price. So on a weekly basis, the trend is down. Now let's take a look at the sentiment and the internal before we analyze the S&P 500 price action in more details. We see the VIX continue to be inside of this 20 and 30 level. And the put call ratio in the middle of the week, it actually dipped down to the 0.6 level. But at the end of the week, it closed above the 0.7 and closed at 0.72. So the VIX and the put call ratio are not sounding the alarm, but they all continue to alert us to stay cautious. On the New York Stock Exchange up-down volume ratio, we saw a reading above 5 on Monday's rally, and even when the S&P 500 closed with a loss on Wednesday, we saw an up-down volume ratio positive 2.57. The up-down volume ratio was only minus 2.5 on quad watching Friday, with the S&P 500 down more than 1% or 37.5 points. And the daily advanced decline show only 931 more decliners than advancers for a day that the S&P 500 lost over 1%. Typically, a day with a loss of 1% or more, the decliner would be leading the advancer by at least 1,500 issues. And more interestingly is the positive advance decline. On Monday, it had 1,927 more advancers than decliners. And on Fed Day, Wednesday, we saw a positive divergence between the advance decline and the S&P 500. It has 741 more advancing issue than declining issue on a down day for the S&P 500 on Wednesday. So from these readings, the up-down volume ratio and the daily advance decline are showing signs they are firming up. And throughout the week, the NYSE new high outnumbered the new lows. And also, we saw a slight expansion on the new high. So this internal also showing signs of firming up. And the NYSE cumulative advance decline line is showing a positive divergence. We saw the S&P 500 move to a lower low, while the cumulative AD line is above the prior low. So this is a sign a potential rally could appear soon. Moving on to the NASDAQ market, we also see the up-down volume ratio is showing more strength on the up days than on the down days. It was 1.6, positive 1.6 on Wednesday, in which the NASDAQ 100 closed with a loss, and a modest minus 1.26 and minus 1.13 for Thursday and Friday, respectively. And both of these days, they closed with a loss. The daily advance decline show only 178 more decliners than advancers on quad watching Friday, with the NASDAQ 100 lost 1.3%, almost 134 points. And that's not a sign of a broad-based sell-off. So these two internals are also showing strength as the large cap tech stock getting hammered. The NASDAQ new high, new low also remain in a positive territory throughout the week. It did not see much expansion, but nevertheless, it has not deteriorated. It has 58 more new highs than new low on quad watching Friday sell-off. So this is another sign the market internals are firming up. And the Nasdaq cumulative AD line also show a positive divergence. And this too is a sign that we could see a rally soon. So from the sentiments and the market internals, they are showing sign that the recent consolidation might be coming to an end and a change could be coming soon. Now let's analyze the S&P 500 price action and see what we could expect for the coming week. On this daily chart, we saw the price came up to the prior week pivot high and got rejected, and then it came back down. It tried to come down to fill this gap near the 3284.53, and it was short from filling this gap. So far, the pullback has already given back a little bit over 8% from the all-time high. So if it come down and fill this gap at 3284, then the correction would be somewhere near the 9% level. And if this gap gets filled and doesn't get a bounce off of the gap and continue to come down to this 32 level, this 3200 level, then the correction would be a little bit over 10%. And switching over to the 60-minute chart here, we're going to look for potential support down here near the 3284, essentially this gap here, and also in confluence with the 50% Fibonacci retracement. And if that doesn't hold, then we're essentially looking for this 3200 level, which is also in confluence with the 61.8 Fibonacci retracement. And for resistance, we'll be watching this trend line and also the level near 3500. If the price could get back above this trend line, then we could see this all-time high could be back in play, the 3588 level. Now let's take a look at the other market indexes. For the Nasdaq 100, the Nasdaq 100 already gave back a little bit over 13% from the high throughout this correction. So we're going to be watching this level here somewhere around 10,314. And that is also in confluence with the 38.2 Fibonacci retracement. And that would be the potential support that we'll be watching for the coming week. And this represents a correction of a little bit over 17% if it comes down to this level. And for potential resistance, we'll be looking at this trend line here and also the level near 12,000. If we could get above this trend line back into this channel, then we'd be looking at this all-time high, 12,432.44 to be back in play. The Dow Jones Transportation made a new all-time high last week on an intraday basis. So next week, we'd be watching to see would it be able to close above this all-time high, which means close about 11,623.60. If it pulls back, then we're basically looking for this 10,960 level for potential support, and that would be also near this trend line. For the Dow Jones Industrial, we said the trend line was going to be a potential resistance last week, and we saw the price was trying to get back above this trend line, and it failed. So now it's making its way back down. So the support that we're going to be monitoring will be these two gaps once again, near the 26,924 and 26,525. And the potential resistance will be once again this trend line and this pivot high here at 29,199.35. Then the all-time high up at 29,568.60. Now, having the Dow Jones Transportation put in a new high, the probability is high for the Dow Jones Industrial to follow up with making a new all-time high. So we'll be watching for the industrial to make its move back above this trend line and work toward the all-time high. For the Russell 2000, it is still trying to get back up above this 1,610 level, and we will continue to watch this for a move to that level as a potential resistance. And if the retreat downward continues, we'll be watching for the potential support here at 1,461. And if it get down to this level, and that would represent approximately near the 9% correction area. Let me show you the consolidation of the balancing act that the E-mini S&P 500 future, the ES, been doing for the last couple of weeks. I posted this chart with the volume profile on my Twitter stream on September the 14th, showing how the ES been trading within this range here for the last 6 sessions. You can see how it's been trading inside of this consolidation area, what we call the balance area, and sitting right here at the middle of this zone. So a couple of days later, I posted this chart, the updated chart on the ES with the volume profile showing how this made its move up to the top of this balance area and started to make its way down. Then you see this chart here, it made its move back to the bottom of this value area. And this is the Globex price action right before the opening for the regular trading hour session on Friday. And here is the latest volume profile chart for the ES, the E-mini S&P 500. Notice how it broke below this value area and then came back up and closed right near the edge of this bottom of the value area. So this could be a what we call look below and fail. And if the ES come back into the value area next week, then I'll be watching for the possibility for this thing to move back up to this upper level and this composite value area high near the 34.24, and then possibly break out of this value area and move up and try to seek out the next high volume area. By the way, if you're interested in learning how to set up this volume profile chart on your Thinkorswim platform, I have just posted a tutorial on how to set up the volume profile on Thinkorswim. And I have put the link in the description below. And also at the end of this video, I will pop up a end screen here that you could click on that thumbnail, and that will bring you to that tutorial, as well as if you click on this information icon up here, there is also a link that will bring you to that video. So in summary, we saw the S&P 500 continue to consolidate within the 34.28 and the 33.18 zone. The S&P 500 went up to the top of this 100-point price zone and came back down to the bottom of this price zone on the same week. And that's like a 200-point round trip for the S&P 500, 100-point up and 100-point down. This whipsaw gave chills and cheers to the bulls and the bears. And on Friday's close, it appeared that the S&P 500 could continue to move down in the coming week. But with the firming up of the market internals, the downside could be limited. We could see the S&P 500 comes down and fill the gap near the 32.84, then reverse back up and takes out the 34.28.92 pivot high and make its way toward the all-time high. The current price action doesn't warn one to initiate new short position unless the S&P 500 had decisively broke below the 32.84 and passed the back test of this breakdown. For long possibility, one might focus on the Dow Jones Industrial for a move to make a new all-time high due to the Dow theory signal from the Dow Jones Transportation. Now, you might think that the S&P 500 will also make a new high when the Dow Jones Industrial makes a new high. That is not always the case. For some of us, we are familiar with the phrase flight to safety, and that could be the case when the Dow Jones Industrial makes a new all-time high next time. So with the firming up of the market internal, they could be telling us the end of this correction could be near. But as always, be prepared for the unexpected. Be sure to click the thumbs up to help me share and promote this video on YouTube. If you have any comments or thoughts on the market, post them in the comment section below. Thank you for watching and stay safe.